Everyone, I'm back. First, I want to apologize that I haven't posting videos for the last 2 weeks. I was out visiting my family, and I hadn't seen them for a long time because of the COVID, and I was able to enjoy some family time. And now, back to business. This was a very interesting week, the week ending July 25, 2020. Let's take a look what we're going to see today. We're going to review the major indices, both on a year-to-date basis as on a weekly basis. We're going to look at the Fed balance sheet and see the huge impact that this excess liquidity has thrown into the markets. Then we're going to take a look at the FANGs because a lot of the FANGs are reporting this week: Apple, Amazon, Google, and Facebook. And these companies have been stretched uh, crazy to the upside, so it could prove to be an interesting week. We're also going to review the main sectors within the markets, both in the S&P and the major moving sectors. As well, we're going to review our anti-bubble positions that we have been talking about for the last 6 or 7 weeks that are working unbelievable: gold, treasuries, tips. I hope you guys were able to get into some of these positions when we started talking about them. And also, we will take a look ahead. What do I expect to happen in the next week? The next week is going to be a very interesting week. So, without further ado, let's go. Here is a review of the major indices. The NASDAQ is above 19, almost 20% above where the year started. This is an absolutely crazy number. Just a few days ago, it was up 25%. The S&P is flat, and the laggards are the industrials and the Russells. This huge divergence that we're seeing right now, it's not new. We have seen this divergence in the last 5 to 6 years, where the Nasdaq has outperformed everything and everybody. And within the Nasdaq, 6 stocks make up 50% of the index, the FANG stocks. So it's whatever happens to the FANG stocks is very much what's going to happen in the market this week. Now, the last week for the Perma Bulls and the Dow traders and the Robinhood traders, we had a down week. Of course, this is how we have down weeks. We have a down week in the Russell of 1/3%, the S&P of 0.5%, and the Nasdaq crashed 1.6%. People were claiming for the Fed intervention after just a 1% down move on the Nasdaq. This is how crazy things have gone. A lot of the weakness in the Nasdaq is due to Tesla. Tesla, as you know, reported earnings. The stock shot up to almost $1,800 to finish at $1,400, and I expect Tesla to keep going down to $1,200 in the near future. And the company is not growing. The company is not selling more cars. Tesla is not a company. It's a betting mechanism for young retail traders and algorithms. Now, take a look at this. This is absolutely lunacy. This is the size of the Fed balance sheet. As you can see, this huge up move down here started when we had the crisis in 2008. And the last year, the Fed has almost tripled or quadrupled the amount of money it has slushed into the economy. All this with the hope of saving the economy that we're living in. I know most of you are looking at the market and you're seeing, hey, the economy is really bad. How come the stock market is doing this well? You see, the stock market and the economy are not the same thing. The Fed is putting a lot of liquidity in the market, and that liquidity is filtering itself very rapidly into the stock market. That's why the stock market is up. Valuations, we hear people say that valuations don't matter anymore. Apple was trading around 15 or 16 times earnings for the last as long as I can remember. Now it's trading almost 30 times earnings. but people don't seem to care. So right now, the only game in town is the Fed. Now, one thing I think investors are missing is the Fed cannot print sales. You could give a company as much liquidity as you want for their bonds, for their investments, but that liquidity doesn't translate into sales, doesn't translate into earnings per share, so and doesn't translate, more importantly, into solvency. So we're going to see a lot of companies going bankrupt in the near future, even with this huge Fed intervention. Another huge effect that all this money is pumping in is a huge devaluation of the dollar. This year, especially the last 7-8 weeks, the dollar has devalued more than 10%. Most of you that live in the US don't understand what a currency devaluation means. And for us that grew up in other countries where devaluations are run of the mill, devaluations make everything more expensive. Just take a look at lumber. Lumber prices have risen 25% in the last 5 weeks. Take a look at gold. Gold is at all-time highs, more than $1,800 and going all the way to 2,000, I believe, in the very short term. So we're going to have, I think, a problem that the Fed cannot fight, which is going to be inflation, if they keep devaluing the currency like they have been doing for the last 3 months, very, very heavily. Now, we were talking about the FANG stocks. As you can see, take a look at this. This is actually the first little down move we've had since the March 23rd low. This looks very ominous. This looks like a double top, but it's not in danger still. The 21-day moving average is holding up very, very well. And we see here this yellow line, which is a very, very steep trend line. And the NASDAQ has to hold both of these indicators, the 21-day and this trend line, before signaling a bearish move down. If the NASDAQ bounces here or bounces at the trend line, I would say that is a buying opportunity, believe it or not, to get into the NASDAQ. If we break down, then I would say it's time to get out and look for something else. Next week, like we mentioned, we have Facebook reporting on Tuesday, and Thursday we have the trifecta of Apple, Google, and Amazon. So the whole week is going to be very, very fun and very interesting to see what happens. Now let's take a look at some of the major indices. We can see that the big winner for the last week was silver. Silver was underperforming gold, and it caught up, and it caught up in a hurry. What is amazing about this market is the amount of the moves. The size of the moves are humongous. Normally, a 1% move, a 0.5% move is huge. In these type of markets, we see moves of 20% here in silver, an additional 6% in gold, a 6% more in Bitcoin. Look at the euro, up 2%. Why did the euro go up? Because the dollar devalued. And look at high yield bonds. People are chasing yield as much as they can. And this is something that may be weird to some people. Hey, Tony, you're saying we're going to have inflation. Inflation makes yields go up and bond prices go down. Why is TLT going up if we're going to have inflation? Well, the answer is because people are hiding here right now because they feel the market is stretched. And when the dollar devalues, emerging markets and other countries, stocks go up. And so we can see the huge effect of the dollar devaluation taking effects on emerging market stocks and the bond market. Now let's take a look at the S&P sectors. The big winner this year, of course, has been technology. And it had its first down week in a long time, in a very, very long time. and people are panicking because they see a 1% down move after it's up so much this year. The Nasdaq is up 20%, but it was down more than 20, so it's actually almost up 50% since the lows. Then we can see we had a very strong week also in consumer staples and materials, as well as utilities. XLU was one of the semester review stocks that we talked about a couple of weeks ago. And look at how strong a week it had, and look at how strong a month it's had. It's gone up 7%, outperforming everything. And still, the worst sectors this year have been energy, financials, and industrials. I still think that we should avoid the financial sector in the near future, especially with interest rates going down and staying down for a long time. Now, on our last video, we talked about second semester themes that could work. I didn't know they were going to work this fast and this huge. The gold miners had a 10% up move, and they're up 15% for the month and 42% for the year. So the gold miner stocks are just on fire. The bonds, even though yields are way down, they still had a 3.5% up move for the month. Gold as a precious metal was up 6% for the week and almost 7% for the month. And our TIPS, which are our inflation index treasuries, also had a very, very solid week, and they're up 7% for the year. Utilities finally catching a bid, and they're up 7% for the month, and they're still down for the year. And the other commodities that I like are soybeans and corn. I also like lumber, but I don't like chasing lumber up 25% in 6 weeks. So lumber is something that I would avoid right now. Now let's take a look to the market technically. These are the last 5 trading weeks. As we can see, the stock market actually didn't move the last 5 weeks. And finally, the momentum indicators are starting to roll down. Remember, everything above the 150, which is my white line here, means we still have to buy the dips. So I would look to buy the dips here and here, which are like the 3127 and the 3050 levels at the S&P. We're not hitting the panic button right now, but because of the FANG stocks being such a big part of the indices, if they disappoint this week, these levels that seem way, way far away could get hit really, really fast and surprise a lot of people. Remember, the market inflicts the most pain on the most number of people when they least expect it. Well, that's it for this week's market review. I'm very happy to be back with you guys. Thank you very much for watching this video. If I could ask for a favor, I would love you to subscribe to my channel. Click subscribe. And if you could like the video, if you like the video, please smash the like button, and also leave me comments or questions or suggestions. I read them personally and will answer you directly. Thank you very much for taking time from your weekend to spend with me, and good luck trading, guys. And remember, you gotta risk it to get the biscuit.